So first up, we have Archax, the FCA-regulated digital asset exchange broker and custodian, announcing they created a tokenized representation of its interest in the Aberdeen Standard Liquidity Fund. And this is Aberdeen's flagship multi-billion money market fund leveraging Hedera Hashgraph DLT, of which Aberdeen is a governing council member. So we know Aberdeen, a global investment company holding over £508 billion in assets, will first move to make Hedera the tech of choice for investment fund tokenization. And $508 billion to USD is over $640 billion US dollars. And so regarding Archax tokenizing Aberdeen Standard Liquidity Fund on Hedera, this is approximately £16 billion in value added to the TVR, total value represented, instead of TVL, which is total value locked in DeFi, in a £15.7 billion Aberdeen Standard Liquidity Fund. And this is happening on Hedera Hashgraph. So 15.7 billion pounds to US dollar is just under 20 billion USD. And when we go to websites like DeFi Llama to look at the aggregate value of TVL total value locked in all of these protocols, we can see the list right here: 12 billion, 8 billion, 5 billion, 4 billion. And this is one important metric to measure DeFi, the total amount of crypto or digital assets that is being locked up in this protocol for all types of DeFi applications and lending. However, total value represented, or TVR, is going to be an important metric in the future for a variety of L1s that do tokenization. We can look at the chart for TVL during its all-time high over 300 billion in December of 2021. Now, me personally, I believe in the future of tokenization as well. I do believe TVL has a place, but I'm a lot more interested in enterprise TVL in real-world applications rather than just retail. So right now TVL is about 80 billion, the all-time high was 300 billion, and I do believe with TVL total value locked, as this asset class matures, we're going to surpass 1 trillion, if not hit multiple trillions in TVL. But what excites me more is total value represented, or TVR. Because this could be measuring the value of traditional assets in a variety of asset classes: stocks, real estate, bonds, collectibles, precious metals. We know that Hedera even has diamonds tokenized on their platform and trading volume. Although it might be small for now, this is a huge market, and this is just one example. So whenever I see tokenization of intangible assets or other asset classes on some of these protocols, and remember, there are benefits to be plugged into the public network for liquidity, security, a second instance audit trail to cross-reference to your private instance, all types of things. And I know these estimates are super high and might look insane, especially with where we're at today, but I do believe the future is going to be tokenized, and even if they're off a little bit, there's going to be multiple trillions of dollars in the future running or being interoperable with DLT. So Swift estimates volumes of tokenized assets could reach 24 trillion by 2027. We have BCG estimating by 2030 the tokenization of globally illiquid assets could reach 16 trillion to as high as 68 trillion for the best case. So I'll believe that when I see it. I believe that will happen in the coming decades. And the tokenized market is estimated to be 10% of global GDP by 2030. So tokenization will affect securities, commodities, real estate, art, collectibles, currencies, derivatives, and then new asset classes as well, and other asset classes, or intangible assets I should say, that have never been tokenized, let alone monetized, such as IP or intellectual property. We've already talked about the world's largest banks and custodians all creating crypto trading desks: BNY, Fidelity, Charles Schwab, State Street, Goldman, BlackRock, NASDAQ. And we also have Esper Bank. This is Russia's biggest lender to offer crypto asset trading this month. And in previous videos for Casper, we discussed the benefits of tokenization and representing different value on-chain. And remember that tokenization, yes, it's going to impact the financial services industry massively, but this is going to have a rippling effect in every single industry vertical. Tokenizing assets, data, and information can help business secure customer information, and this increases security if it's distributed on some type of DLT network. This will help other industries build greater liquidity if there's more volume in trading and bids and asks at a variety of price points. This makes the spreads tighter, it makes everything cheaper, it makes transactions a lot more efficient. And of course, disintermediation, getting rid of third parties or, the 5 to 7 middlemen that we utilize in a transaction. You can automate all of this with smart contracts and business logic and if-then statements. And today for assets, we heavily rely on brokers or even third-party organizations. So without having to rely on all of these middlemen, businesses can execute processes faster and cheaper than ever before. So just like DeFi and total value locked and a lot of those cryptos absolutely skyrocketed in previous bull runs, I think the future and long-term success will also depend heavily on total value represented. So I'm paying a lot of attention to different protocols that have actual tokenization engines and solutions. such as Casper Network and Hedera Hashgraph. Now, why would I say that? Because they're not just going after small retail use cases, they're going after the big money, the enterprises. Once they get certain enterprises on lock, it'll be a stickier use case and likely be there for the long term. And that's because the enterprise market is the largest market in the world, yet it's the least penetrated in blockchain. So we haven't seen anything yet or the true potential of some of these networks with real adoption and the success case. So I'm paying a lot of attention to this. We have Ripple, the company, to showcase real estate asset tokenization with the Hong Kong Monetary Authority. And by leveraging the power of blockchain technologies such as the XRP ledger and Ripple's central bank digital currency platform, Hong Kong citizens can experience the release of equity faster and more efficiently. And commercial banks can also expect to benefit from higher velocity of loan throughput and more flexible payments. We have Casper Labs with the Actus Foundation, so this is one of the 3 biggest data standards in the world. So there's Actus, there's ISO, which everybody's familiar with, and then FIX. So Casper is working on tokenizing and representing financial contracts. Now what's a big deal about Actus is this represents 98% of all financial contracts in the world. This could be bonds, leasing agreements, and payment plans, essentially everything. And the crazy thing is there are only 32 contract types that need to be built and can be represented as a smart contract. And all of this financial data being tokenized into an interoperable framework across the board so everybody is using the same messages and speaks the same language. This will make operations faster, it'll help manage risk, and if we had this type of technology today, it could have helped prevent so many bank collapses that we've already experienced over the past 2 years. You have Algorand with all types of music products. We can see Dequency, a decentralized licensing marketplace where artists can post their music for others to use in their visual projects. So Algorand has a bunch of projects in the works, as we can see right here. We got Dequency, we have LimeWire, and even right here, share ownership in a song and future earnings. So all automated via smart contracts. And coming back to IPW and looking at these stats, so we know the S&P 500's market capitalization is over $30 trillion, and it's estimated that intangible assets account for 90% of the S&P 500 value. So that's tens of trillions of dollars yet to be monetized and tokenized. And of the S&P 500, patents equal about 30% plus of its overall value. So right there, you could be estimating about 10 trillion in patent value. So I'm keeping tabs on Casper's testnet, looking at their deploys, looking at their contracts, tracking on Scanspur, and really keeping tabs to look at some of the WASM costs and how much computation all these transactions could provide. Because remember, we still have the 25 million patents to be minted. There's only been a little test batch of about 145 thus far. So we have 25 million patents, aggregate value of 7 to 10 billion on Casper's public network. And just to get an idea of some of these Fortune 500 companies and their patent value or their patent portfolio value. So Porsche, as an example, their patents portfolio value is bigger than their market capitalization. Something that couldn't previously be monetized, and now it is. Patents, land deeds, art, and more. Next up, we have Jungle Inc. right here. In some ways, the Hinman documents were more powerful than expected. The SEC acknowledges that Hinman was making up his own tests, not based on the law, and they also admit this creates confusion. The SEC admits if someone is using a token, it's not a security. This is good for on-demand liquidity. And of course, other XRP ledger applications that people are using are even leveraging hooks in the Sum app. The SEC admits they are not even sure on Ethereum and they may want to change their stance in the future. And the SEC admits there are regulatory gaps that they may not have authority over. Bingo. And we've shared this before. This is Gary Gensler saying 3/4 of the market is non-securities, it's just a commodity, cash, or crypto. So this is a few years back, shared by Scott.
So we already know in the US and in many other jurisdictions that 3/4 of the market are not ICOs or not what would be called securities, even in the US, Canada, and Taiwan, the 3 jurisdictions that follow something similar to the Howey test that we've talked about. 3/4 of the market is non-securities, it's just a commodity, a cash crypto. So you'll hear debates about initial coin offerings and what's a security and what's not a security. Relevant and important debate. But for 3/4 of the market, it's not particularly relevant as a legal matter, as a regulatory matter. Brodus.
He just said for 3/4 of the market, it's not relevant for a legal matter. The SEC also listed the Hinman speech on their website to guide the market. Jay Clayton, the former SEC chair, personally directed market participants to this speech on the website during speeches. And the whole crypto space has tried shifting to be compliant with his guidelines. If the SEC wants to shift policy, do so with further guidance, not enforcement. And even Rath Economan right here and previously when the SEC said that secondary sales are not securities. So come on, get this over with. You can find Ripple, they can pay a little bit, but we just want clarity that secondary sales for XRP, buying XRP off an exchange, is not a security. The SEC, the CFTC, they've all said that an asset can start off as a security and it can evolve into a new classification as it becomes more decentralized or is used more so as a payment token, a utility token, any type of use case. And for anybody brand new, the XRP ledger is vastly different today than it was in 2013. We can see Rath Economan, only the purchase of land and service contract was the purchase of a security. So the contract, those who bought land only had not purchased a security. So there's a lot of hypocrisy. The SEC is going to do their best to delay the inevitable, but I don't think they're going to stop the crypto market. An asset class that goes from 0 to a billion, to 100 billion, to 1 trillion, to 3 trillion at an all-time high does not disappear. There's going to be a lot of projects that don't survive and go to zero, and I'm most focused on those that have real developments, real partners, real applications, real things being built, and also real funding and ample funding, millions of dollars, if not way more, to survive the bear market. Because there's going to be a lot of low caps, unfortunately, that just don't make it. So the fear and greed index is at 46, a tad in the fear. And per previous videos, even this month, my overall expectations for the Bitcoin price chart in a variety of alts are still the same. And last but not least, we have iTrustCapital linked in the top of the YouTube video description. If you use that link to fund your account, you'll get a $100 funding reward. It seems they just updated this website, so it's looking pretty sharp. I've been using this company for over 3 years now for tax-free trading and investing in the crypto asset class. And remember that iTrustCapital is free. There's no hidden fees, monthly fees, custodial fees. There's just a 1% transaction fee if you trade. If you don't, there's no fee whatsoever. So feel free to check it out, guys, because we don't know what's going to happen for short-term and long-term capital gains in the tax rates in the future. So I personally want to have different hedges and leverage different vehicles just in case. Hope you guys enjoyed this one. Huge thank you to all that hit the like button and stay tuned for the next video. If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.